G'day, fools. I'm Scott Phillips, the Motley Fool's Chief Investment Officer here in Australia. You know that by now. And you also know that this is our weekly feature episode called Motley Fool Stock of the Week, where we bring you one company from one of our recommendations in one of our services. We pull the curtain back and give you a look inside. And by the way, if you're not already a member, something for free. That's right, a free buy recommendation as of right now, straight from us, straight to you. Now, before I do that, I'm going to give you my usual intro. You know this by now, but let's go through it. We're going to give you general advice only, not personal advice. We will say we think this stock is a buy. You need to decide whether it's right for you. That's number one. Second thing is we are long-term investors. We're not giving you 1 day, 1 week, 1 month, or even 1 year projections, forecasts, or guesses. We're looking out for the long term, 3 to 5 years, hopefully longer, and giving you a stock we think is worth buying for that long-term time period, which as investors, the long term is the only term we think that counts. So you want a market-beating stock over the long term. That's what we're looking for. And lastly, of course, just remember that we are doing this. We're recording this on the 19th of October, 2021. We're going to put it live on the 20th. And thereafter, if you're watching this a month or a year or a couple of years later, just remember our view may well have changed. Maybe things got better. Maybe things get worse. Maybe the price goes up. Maybe it goes down. Keep those things in mind. As I said, I do this every week. I do it for a good reason because it's important. But please do remember that's the case. And that out of the way, with no further ado, let me introduce one of our gun analysts, Kate Lee. G'day, Kate. How are you?
Hi. I'm very good. How are you, Scott?
I'm very well, thank you, Kate. Thank you for joining us again. Always love having a conversation with you because you're such a smart, thoughtful person. You bring such great quality analysis to the table. So thank you for joining us again. And we're going to talk about a company that I know a little bit about. I've said before, one of the funnest parts of doing this, honestly, for me, is I get to hear from you guys about some of the stocks you're covering, you're following in a lot more detail than I can. I figure after 10 plus years of this, I get a pretty good sense of most of the companies on the ASX, but I don't go as deep as I'd like on most of them. And so this is as fun for me, frankly, as I hope it is for our listeners and viewers. Our listeners, of course, on the Motley Fool Money podcast, our viewers on the Motley Fool Australia's YouTube channel. So Janison Education, the code is JAN. Kate, I'm going to assume it's in education somewhere, but give our viewers and listeners the down low. What exactly is Janison Education? What does it do?
So, Janison Education is a software company, and Janison is in the area of digitalizing assessment tests for
Okay.
schools and professional certification bodies. So, for example, if you happen to be a parent of school-aged children, you might be familiar with some tests such as NAPLA or ICAS.
Mm-hmm.
They are conducted nationwide. And these assessments are provided online rather than paper based, and Janison provides that software. So
Right.
Janison also provides some professional qualification tests, like you can think of chartered accountants exams. So they do
Okay.
those, but they basically offer the platform catered for those assessment tests. And the company has largely two business units. So they
Mm-hmm.
have this assessment software business, as I explained. They also have online learning for enterprises. So you can, those online education
Mm.
platforms for
Mm.
employees. But much of its growth is really coming from the assessment part of the business. So that's the exciting bit.
Nice. It's an amazing industry to be part of right now. We know everything's going online. We know software is eating the world. The famous Mark Andreessen quote. And frankly, we know there's going to be plenty more testing and plenty more certification being done right around the world. People want to know how I'm doing, how they're doing, how we're doing. And education in particular. Certainly, my son did NAPLAN this year, so I'm very, very familiar with the concept. I didn't actually know until right this second that Janison actually powered the software. So there you go. That's something I've learned today, but a really important one because if you can provide that, fundamental testing capability to a government or to an industry body, you're in a pretty good place. And I guess I assume they think a growing business. As you said, it is part of what's been growing for them. And I'm going to assume, because I know you a little bit, Kate, I'm going to assume that the growth story is part of why we like Janison as an investment and what makes it a buy. Maybe you can take us from the business itself through to the investment case. Obviously, we know what it now does, but why do we like it as an investment?
See, the company has a long history of education, this software development, and initially it used to make a bespoke software for educational institutions globally.
Okay.
Then some years ago, the company made two important changes in its strategy. One is it shifted towards platform business. So it's more
Mm.
profitable, and you know the story, right? It's coming from customized sort of product development into a platform which they can scale much more easily.
Mm.
Gross margin of that, the former, the bespoke software development was like 30% to 50%,
All
whereas
right.
the latter, the platform business, bring in 75% to 90%
Wow.
on the gross
Okay.
margins. Yes, so that's the big story there.
That's
And
phenomenal.
also,
Okay.
yeah, so, and I believe the management is very global minded. And at
Mm.
least since its IPO back in 2017, the company had clear global growth initiatives.
Mm.
So in 2019, the company signed a very meaningful agreement with the OECD. That's the 5-year exclusive contract to develop one of their OECD test, which is called
Mm.
PISA test, that's provided for schools globally. So Janison became their partner to develop this online version of the test.
Mm.
So on one hand, this is a long-term growth story benefiting from that digitalization of all those assessments that you mentioned, like that used to be provided on a paper, and then that's
Mm.
being digitalized. So that's a long-term story, but it's not just that. On the bottom up, from the bottom up approach, the company has a number of very exciting products and projects that are ready to generate attractive revenue growth. So let's just get into a bit more details into these individual projects. They've got
Mm.
like a couple, but I think the most exciting one is, as I mentioned, it's PISA for Schools test that they work together with the OECD. So Janison worked together with the OECD since 2019, and they spent a couple of initial years to develop, obviously, this platform. Then it has been really past 18 months or so that Janison had been rolling out this test globally. So far, there are about 15 countries, 1 5, on board, out of the addressable market of approximately 90 countries, 90,
Mm.
as Janison estimates. So the revenue contribution from this test will materialize. It's very minimal. So, you've got all these um, countries on the list, but it hasn't been, in terms of revenue impact, it's just about to kick in more meaningfully from next year, from
Mm.
actually this year. So
Mm.
that's the great story. And then when it gets to the revenue model, there's two ways Janison is involved in this test. One, they could be just a mere software provider. And then
Mm.
in that case, they get average about $200,000 per year per country. So you can, multiply like, $0.2
Mhm.
million times, if it gets to 90, then you get, $18 million of
That'd be
annual
nice.
revenue, which is not small compared to
Yeah.
their FY21 total revenue of 30 million. So it's not little.
Mm.
So the rolling out of that business model is one part of the story. But the
Mm.
story gets better from here. So in some countries, say here in Australia, also in the US, in the UK, Janison is not just a software provider. It actually plays a more important role in these in-country rollout as a national service provider. And in this case, Janison collects $7,000 per school. So imagine, in these three countries, there are 30,000 secondary schools. So you can see the growth potential and the massive sort of addressable market that they can grow into. And let me just give you some numbers. Even if we assume only 10% penetration into those markets, based on those three countries and based on, 30,000 secondary schools, the
Mm.
revenue potential from this test will be 21 million. And as I said, the full revenue they've done last year was 30 million. So
Yeah.
if
Right.
they can get there in the next, 4 to 5 years,
Mm.
that's
Mm.
the merit of this small cap investing, isn't it? Like, they are such a little, like, small companies with great
Mm.
potential. So if they can get certain things right, then it could have a really meaningful impact in terms of revenue, and then along the profit lines as well. So that's the excitement, and obviously, they're not gonna stop here. Obviously, they can add,
Mm.
say, like Canada, Singapore, Hong Kong, like all these English speaking countries that may um, participate in this test. And then remember, it's just one of their many projects. Of course, that's the most exciting one, but that's just one project that they are working on. And then secondly, they've got ICAS test. So this is interesting. So they acquired actually this business from UNSW Global in 2019. So it's not organic growth; it's growth from the acquisition. I think the full name is International Competitions and Assessments for Schools. And this test is offered to some school years, not all school years, to test student academics. Last year, the revenue from this test was only $5 million. It was because it was hit by the pandemic. And the demand for this test was impacted by the pandemic. And, so it's a reopening, recovery story from the pandemic to a certain extent.
Mm.
And before the acquisition, there are about 1 million students who have taken this test annually, and then they charge $15 per test. So that's like a $15 million revenue potential right there, just from the recovery from the pandemic, right? And then, that they could increase these fees, or, obviously that audience would grow like, moderately over the next 4 to 5 years. So the company aims to achieve around $20 million revenue from this test by 2024, FY24. So there are like, these two tests are obviously the meaningful revenue contributors. And as I mentioned, right, going back to the margins, they are moving. All these new tests are based on the platforms. So they generate 75% or 90% margins on the gross margins. So there's a margin story as well, like, margin expansion from the product mix change. And then actually the company came out with their long-term targets. FY24, they're expecting total revenue of $80 million to $100 million, which I think is fairly achievable, although future is unknown. And then also, they have certain cash flow targets as well. So, compared to that, then current market cap, which is just few $100 million market cap, I think there's a best opportunity for investors. I think that's the main points that I touched upon.
It's a cool idea, Kane. It's cool. It's a cool model, because if you think about some of the things going for it, as you say, it's small, and that makes it a bit riskier. And we don't know how many of those things will come to pass. But you point out so many different growth ideas. The idea of starting small and then hopefully getting bigger, growing into large markets, and the global education market got to be one of the biggest. But also, too, if you think about going from one thing, it's hard to go from Australia to the world almost by definition. We're small, we're a long way away, all that kind of stuff. But if you can make it successfully, then the size of the market outside Australia is just, we know this, right? By definition, so much larger. So it's a hard leap to make. But if you can make that leap, you can add zeros to revenue. You can add zeros to profit, and zeros, of course, to market cap. Now, again, we don't want to over-egg the pudding. We don't want to pretend these things are necessarily guaranteed or even super likely. But the path they're on, as you say, the fact they've already got these deals with OECD, it's a pretty attractive combination. Again, as I said, I kind of knew what it did, but I didn't have a really strong sense of that sort of revenue potential. I also love the cloud story you talk about. When you do something bespoke for someone, you kind of work in a cost-plus world to some degree. When you say, hang on, let's take advantage of scale. Let's go to hundreds, then thousands, then tens of thousands, and eventually millions of people. With one piece of software you develop once, of course, you keep developing it. But the scale advantages of that, and you've talked about the margins from 30-something to 75+%, just by simply tweaking the business model. When you get some of those things in your favor, if you kind of add some of those things together, the idea of software as a service, of cloud, of big markets, of scale, all that kind of stuff, it really works. And it sounds like Janison is well and truly on that path. Matt, I will ask you about the risks in a second. Before I do, here's my regular ad. If you're listening to this on the Motley Fool Money podcast, thank you for doing so. We very much appreciate it. You can check out the Motley Fool's Good Oil podcast. It's called officially The Good Oil with Scott Phillips, because I host it. So that's what it's called. You can check that out, where we have interviews with business leaders, experts, entrepreneurs, just a bit of a look under the bonnet of what's going on and how it's all being done. Some great conversations already, including my most recent one with Greg McKenna, who's CEO of Police Bank. You can check that out. If you're watching this on YouTube, of course, you can check out both those podcasts, and please do. But if you're on the podcast, also check out our YouTube channel. I mentioned already, the Motley Fool Australia. Just jump on YouTube and type the Motley Fool Australia into the search box, or just Google the Motley Fool Australia YouTube. You'll find our channel. We have this video every single week, a new episode of Stock of the Week. We have Stocks in Focus. We have our favorite investing books. We've got views on the market. There's an IPO video coming up. Stay tuned for that one. We do a whole lot of media appearances. Everything we do on video is on that Motley Fool channel, so you want to check that out as well. And you can follow us on social media. If you're not already, jump on Facebook. Everyone's there. The Motley Fool Australia is our corporate page. My professional page is Scott Phillips Money, so that's just facebook.com/Scott Phillips Money. Jump on Twitter, the Motley Fool AU or TMF Scott B, and those same two handles will help you on Instagram. Again, the Motley Fool AU and TMF Scott P. All right, that's the ad out of the way, but I think you'll like it, by the way. They're all free. All those social media channels, all that video content, all that podcast content, absolutely stone motherless free. So why wouldn't you check it out? All right, Kate, let's get back to Janison, because that's what we're here for. And talk to me for a second about the risks. We always make sure we do a recommendation for our members. We say, look, here's what the company does. We've done that. Here's why we like it as an investment. You've done that beautifully. We don't pretend, though, that everything's going to be roses or everything will even work out. And there are some things that might crimp the investment case or maybe break it altogether. And we normally put that in a section called something like risks and when we'd sell or something similar, just to help our members understand the downside risk and also the things to look out for, the red flags, the yellow flags that may pop up, and how to think about some of those. So maybe you can do that for Janison for us. What are some of the risks facing an investment in Janison Education today, mate?
I think near-term risks, I would say it's the pandemic and how that's going to kind of get in the way when they
Yeah.
try to roll out more aggressively. Because the thing is now the US has signed up already on the paper, and then it's just a matter of time that they, get into the US and then meet with these individual schools and persuade them to take this test and pay $7,000, right? But the thing is, last year, actually about 2 years already, isn't it? Like the US has suffered a great bit. Also, the UK, the same thing. Also with that Delta variant, and it's just the schools. Their focus is not on taking another new test. For example, we think that that's going to come back obviously over time, and students will start to come and attend their physical schools, and that would be a good time. They can probably, I think, rationally, I think there's plenty of reasons why these schools would take this test, because there has been similar tests in the past. Like the aim of that OEC test is really to compare across even different countries how these students are doing, right? So there's this is a good test, well-known organization and all that, but no one can be sure about this pandemic. And I think I'm on the positive side that worst is behind of us, but that's one thing. So if that gets in the way, and if the revenue booking gets delayed because of that, which I think it's a short term, but that's the risk. And also, it's not just the pandemic. Say, like it's a new country, as you mentioned. In the way they start building their sales team or working with the local partner, that would certainly be a risk at this point. The second risk is the competition, I'd say. This is a smaller sort of company. They're doing very well, punching above its weight. But at the end of the day, you gotta keep winning these new projects. And by the way, I checked with the company after 5 years of the initial contract terms with the OECD. The company is positive that unless there's really bad incidents, it is very likely to continue. But obviously, this contract-based businesses, so there's always a risk. There's, I don't know, like in the future, better assessment platform developer in the future might actually eat away these projects. So that's always the risk with these software companies.
Yeah, like competition's always there. Someone's always inventing or trying to invent a new bit of software to take over from yours. It must be this kind of ongoing arms race. I imagine if you're working for a company like that, you're hopeful of what you're going to keep, but you're always looking over your shoulder to make sure no one's undercutting you in price or improving on features or something else. I guess that's the life of a software developer, right? And that's not just Janison, it's Microsoft and it's Google and it's Apple and it's everybody. That's kind of this constant arms race, which, by the way, we benefit from as consumers, and the OECD and other countries I'm sure will benefit from too, because the great thing about the cloud is Janison software will be better in a year's time than it is today They may not even notice the
Mm.
change, but of course they're continuing to work on it. So you're always better to be in front than behind when it comes to developing new software, but that's always a risk, as you rightly point out. Okay, you've done a fantastic job of summarising the Janison investment case and some of the risks for our listeners and viewers. Wrap it up for me. Give me the 60-second elevator pitch. If I was to say to you, right, jump in an elevator and make a 60-second pitch to someone on the way from the 1st to the 38th floor, why should our listeners and viewers consider buying shares in Janison Education?
I think it's a buy from the top-down approach. Janison stands to benefit from the digitalization of paper-based tests in the global market, which I think is attractive. And it's not just that. On the bottom-up approach, Janison has a number of great projects in the pipeline right now that are ready to be monetized, including the PISA for Schools test, ICAS test, and also they are working on this NSW tracking test, and then they've acquired this small one, which is doing pretty much the similar thing. In addition to such revenue growth potential, the company has shifted its business model to a platform-based business, meaning these new projects will bring in much higher margins to the company over the next few years. So we're talking about revenue growth, we're talking about margin expansion, cash generation, and all that. If you are a parent and paying for these assessment tests for your kids, I would highly recommend you buy the shares of Janison as you pay for these tests.
There you go. That's a fantastic buy case. Kate, actually, Phils, I told you she was smart. I told you she'd give you a good analysis, and she has. Plus, by the way, make a little bit of your test dollars back by buying shares in the company that's actually administering those tests. I think that's a great way to do it. Talk about buy what you know. Buy shares in the company that's testing your kids. I reckon that's a great way to go. Kate, thank you very much for joining us for this week's Stock of the Week. Really appreciate it.
Thank you. Thank you so much. I had a great time.
Good. And thank you, fools, for watching and listening to our latest Stock of the Week episode where Kate Lee bought us Janison Education. The code once more is JAN. Thanks again for being with us. And until next time, from Kate, myself, and the whole Motley Fool team, Fool on.